Welcome to Tuesday, September 30th trade recap. We have a pretty busy day to talk about. And yeah, today, low 50-50. On the challenge account, we hit a nice trade. Very low risk though, unfortunately. This would have been the realistic outcome of a funded account trade. But on my funded account, I did take a loss early morning. Right off rip, basically at 9:40, 9:45, around there. But I'll get into all that stuff in a second. Alright, so let's just clear out these charts real quick. Let's start from this daily time frame. What do I need on my daily time frame in order to get a better understanding of narrative and bias on the day? The daily bias is the most important, and that's the only place you're gonna find how that narrative's gonna play out. Okay, so I'm going to toggle drawings. Actually, no, I won't. Okay, so first things first, marking out this premium candle wick, marking out this premium candle wick, as well as this fair value gap, I believe. Yeah, that fair value gap. And then we have this weekly low. Remember, this is our weekly target. And yeah, so if this is our weekly target down here, I'm gonna be bullish going into the day, and going off of these wicks. If you see, if I start that up, we came down, took out this low, tapped in this wick as well, discount wick, but respected this fair value gap. More importantly, these quadrant levels, started to get a rally higher, and that's where we can go to the 15-minute on today. So yesterday, or not yesterday, sorry, Friday, going into Sunday, we rallied basically all night, all morning, and then we had a reversal at around 10:15 a.m. We swept out this larger time frame buy side. So now I'm expecting the market to want to gravitate towards this low. However, in order to gravitate to that low, I would like to see some sort of consolidation, and then a sweep of definitely this buy side liquidity, and then moving lower into this low. So knowing that today, where we opened, I wish I could delete this wick and all these drawings in here, but it's all important. So we open up 9 a.m. right here. I'll just go on the 1 minute. On the 15-minute, we are coming into this two order blocks. We come up into them, we reject them lower off open, and then this is where we immediately take sell side right off rip. We have a tiny SMT up here, but remember, I'm bullish on the day, so any bearish SMT, I'm kind of disregarding in expectance of higher prices and that high being taken out. So we get this sell side take. We get I believe this larger time frame. Okay, well, we did. Oh, that's E-mini Nasdaq. I was about to say they look too close, too similar. Right here, take sell side right there. So very early morning SMT already, and then I'm looking immediately right after we take this sell side, looking for longs. So I like how we created this order block right here with this candle close, and we created a double fair value gap. The reason why I lost this first trade was because of the fact that I have it written down. I have it written down pretty explicitly perfect. Okay, so I'll just explain what I said. The loss today was not the model. I broke a rule. Price didn't return into the order block, which is this down close candle 941, and instead I relied on this 30-second breaker block right here. See how we come into the breaker block on the 1 minute, we get that double fair value gap, breaker block. I would expect this to be a propulsion block. However, never presented itself. I relied on a 30-second breaker, and higher time frame equals higher power, so that was the mistake. Which is why the next trade I need to take, everything needs to be to the dot: liquidity sweep, breaker structure, propulsion, then two fair value gaps. The model isn't flawed, it's the implementation of it. So the implementation of this model here was not good. But I know a lot of people got trapped up in here. I know at least 4 people that got trapped in this long. We came back, got another. Okay, and see, when a long like this should work in a market that's very liquidity hungry, because if the market was very prominently bullish and it wanted to go to these highs, and we had a bullish trending day instead of what we see here, we would have had that run straight up into buy side. However, since market came back down and stopped us out, that's what led us to believe the market conditions are going to be worse going into the later session. So then, knowing this, we have 10 o'clock news, which is Jolt's jobs. Really nothing. I don't know exactly what happened either. 7.23. I guess it is better. It is good, I guess, for the economy. Yeah, raise them up a little bit. Well, previous was, all right, we raised them up. Yeah, we were forecasted to go lower, so that was good. We had good jobs numbers. That's kind of besides the point. This is where it gets technical. We get to this 2-minute time frame, and since we get another sweep and another sell side take, another SMT gets put in, I want to see the higher time frame start to play a role. The 5-minute, the 3-minute, because we have structure starting to form in here. So as soon as we get a break close above this high with this candle, this entire down move on the 2-minute becomes an order block. You can see we consolidate, we sweep the high. So I'm gonna go to the 1-minute. You can see we sweep the high, come down into it. This is our, now we break above with this high. This is now our order block. I'd like to see price return into it. We returned into it. I'm looking for a double for rally gap out of here. We didn't get it. We swept this high, came back lower again. Dug deeper into this order block. Now, if it's around 10:30, I'm going to be eyeing the macro time to be expansionary up into that buy side. Then we come into it, get another sweep, rally higher. There was no double for rally gap in here on the smaller time frame. Plus, I'm waiting on the macro because of the fact that I think we're going to want to come back into this sell side, potentially even take this low. So I have it marked out, like in this session. Anyways, we come all the way back down. We get this turtle soup sweep in this order block. And as soon as we get these two down close candles, this close above, we retrace right into it with this tiny wick right there. So now we have that liquidity sweep. We have that order block. We have that trading into this on some type of time frame is a propulsion block. And now I'm priming for longs. I can look for longs once we tap into this order block. Now, this is where I go to the 30-second. What happens? Right on top of this order block, we tap into it right here. We get a double for rally up on the 30-second. I take an entry. Right there, around that candle close. Stop loss below the low. Targeting, whatever, 85675. I guess that's what we're going to go to. 85675. A 1 to 7.5 RR. If you wait exactly for that model to play out. And yeah, it was perfect. I really wish I risked more on that. I risked 5. I thought 5 was going to be plentiful, but it was less than $100 risk. And then, by the time price runs up here and we have this SMT, I try to look in order to compound some entries on here to take out buy side, but we got stopped out. Break even 1 contract after it came back down. So we can see that, and then if once you're in the trade, I was marking out other PD arrays that I would use to build onto my position. We have this 5-minute breaker block, close above, retest, take the highs, bam. We just missed final TP, which was this buy side liquidity. I definitely think we go get it now around this time. And yeah, that's pretty much it. I would like to see price come up into that and take it out in the PM session. I might look for something in that case, to be honest, because I still have risk on the table that I'm allowed to trade with. Coming back into this 15-minute breaker right here in about 1 minute and 50 seconds, we can potentially see some sort of expansion to these highs. But yeah, that's pretty much it. A little bit of a complicated day, and you can tell the chart's a little bit more dirty. My chart is really not usually this dirty with all the market out, all the other random stuff. But it's needed and it's important because, why did a great factor for the reason I thought I got stopped out here, why we came down a second time, was to induce more sellers, first of all, and second of all, to get into this 0.75 or 0.25 of the daily wick. So, or the daily for value gap, I believe. Yeah, daily, it had to be daily for value gap. The upper, oh no, the daily wick, yeah, daily wick. So yeah, that was kind of how the session played out. Potentially, do I wish I didn't take this first setup? Yes, but I'm glad that I risk managed, and I learned from my mistake, and I was able to prove that I learned from my mistake on the second trade. and execute that perfectly. You know, if I placed half risk on this first one, which like I should have, because it was lower probability, just because we didn't tap in this order block, which is a good, you know, good frame of reference, because now I know that if price doesn't tap in the order block on a double fair value gap, you know, we're either going to be very strong or it's going to be a fake move. And I still would have to backtest that more and more to see, you know, what I can do with that. But that's it, you know. That's all I gotta say. And yeah, I will see y'all tomorrow for the basically last. Wait, September 30th? Is that it? Is there a 31st? Yeah. Oh no, there's not. All right, I'm about to say October 1st. Here we go. Excited. We'll see how it goes. But till then, peace out. Stay safe. God bless.